Welcome viewers, you're watching the Mortgage Busters show. We're all about paying your mortgage off as quickly as possible, as fast as possible, so that you can get the title of your own property in your hands and it's not in the bank's hands. My name's Greg.
I'm Adrian.
And we bring you the Mortgage Busters show. So we've had a pretty good run so far.
Yep, lots of inquiries.
Lots of inquiries.
On our website.
From our website, which is
www.tmbshow.com.au.
That's www.tmbshow.com.au. So we've got a guest.
Yes, we do.
This evening, and her name is Chris Walsh.
Another guru.
Another guru. Of course, we only bring gurus, the best of the best, on this show. Chris is a conveyancer. It's Chris Walsh from Walsh CONVEYANCING. Chris, welcome to the show.
Hi, thanks guys. Thanks so much.
So what's a conveyancer do?
So a conveyancer takes care of all the legal documentation that needs to be produced to transfer ownership of a property, whether you're buying a commercial or residential property in the state of Victoria. So we're engaged from the time the client actually formally submits their offer to the real estate agent, sometimes beforehand to look over contracts, but generally from the point of signing the contract, we do everything that's necessary to transfer ownership of the property right up until settlement and beyond. So.
Oh. Okay, so we are the Mortgage Busters show. We're not the conveyancing show.
No.
But the reason we've got you on is because someone takes out a mortgage to purchase some land or a residential property or a commercial building or whatever, so some property.
Yep.
Your job is to make sure, or a big part of your job is to make sure that what they're buying becomes theirs.
Correct.
Correct?
Yeah. A lot of our job is doing research and ensuring, and checks to ensure that what the client's buying on a contract is actually physically what they're going to get at the end of the day. So we're doing a lot of searching through the titles office. We're searching with statutory authorities, obtaining information in relation to zoning and taxes and that sort of information, so we can best inform the client that, yep, this is what it is. This is what it looks like on paper. You are familiar with the property. You've been there and cited the property you're purchasing. If it's any different.
Do they cite it, and do they measure it, and do they do all those things?
We highly recommend to all of our purchasers to go and physically attend at the property with the selling agent, measure up the property and make sure that the dimensions of the property are what's on the title in the Section 32 vendor statement.
Have you had mistakes?
We've had mistakes. We've had people pick up a metre, we've had people pick up an acre.
An acre?
An acre? That's a good deal.
Because unfortunately, you know, if a property's 30 to 40, 800 years old, fences can have fallen over, they can be on incorrect boundaries.
Yes.
So there's a lot of issues that we come across in the day-to-day running of my business that need to be brought to purchasers' attention.
Do people get themselves into trouble?
People get themselves into trouble.
Okay.
Yeah.
What's the most common problem that arises out of the client, you know, the inability for the client to do due diligence or whatever?
I guess one of the main things I see is really nervous first home buyers who come into the office and say, I've bought a property and here it is, and the agent just said just to sign it and bring it to you, which is fabulous. That's great. And then it's unconditional. You know, there's no subject to finance clause. The agent hasn't necessarily checked that they've actually got the deposit, the 10% deposit that's noted on the contract.
They're working.
So they're working, they've got an income. They are who they are as they've been put onto the contract. Building and pest inspections, it's our job to educate the client and guide them through the home ownership
every area has
process.
a lot of this pest, because I've done a bit of building.
Absolutely.
In some states it's crazy, and some there's none at all.
Absolutely. The whole state of Victoria seems to be in a termite zone, and a lot of what we see, houses have had infestations or are full of termites or have had no sign of termites. There's a lot of issues that come up in building inspection reports, like water damage, additions, things like that. It's our job to find out what's been added to the property, what's been removed and hasn't been documented or permits obtained for.
Section 32?
In a Section 32,
Right,
yeah, that's right. So that's your pre-contractual disclosure document. We try and encourage our purchasers to bring it to us before you actually put your offer forward with the real estate agent, so we can read through it, make sure that the documentation is as it should be.
Well, there's a lot in there.
There's a lot in there.
There's a lot in there. Some of them are encyclopedias.
Yeah,
There's
they
one
can be.
tree in there.
And it can take quite some time. Well, I think
Double-sided.
the biggest Section 32 I've looked at is nearly 400 pages.
Wow.
And unfortunately, the client was feeling some pressure
What
from
was
the
that?
agent to
What-
sign.
what was that?
It was a new subdivision.
I must have been.
Down
They
on
had
the
the old
peninsula.
subdivision in it. Or
It's only a
the
couple of pages.
pre-approval.
So tell me, Chris, can you still, when you purchase a property, can you still put there and/or nominee?
Well, you can, but you don't need to.
Oh, you don't
It's
need to?
implied now. It's
Oh, really?
Yeah,
So you can't
absolutely.
save, the old days they used to say you could save money on stamp duty if you got yourself out of there in a nominee scenario. But I hear you can't do that anymore. Is that
No,
right?
that's right.
So that's
no.
what changed, the fact that now it's implied.
Yeah, now it's implied. So you can just, you don't have to write and or nominee onto the contract. It's you have that right as a purchaser to additionally nominate another person to
Should
purchase
you write
with
it
you.
anyway?
It's not going to hurt.
Okay.
It's not going to hurt. There's extra documentation that needs to be done when someone nominates an additional or substitute purchaser. But yeah, it's your right to do that at any stage throughout the transaction, as long as it's not as a settlement, right on the settlement time. So.
Okay, so what then should a client purchasing a property, again, they're about to commit to a mortgage, they're purchasing a property, what should they do? Should they bring it straight to you before they sign it up, or what's the procedure that you recommend?
Yeah, I recommend to my clients to bring me the Section 32 so I can have a look at it.
Before any contract is filled
Before
in?
signing anything.
Right,
Absolutely, before signing anything. And my clients get that confidence knowing that they can actually have some pre-contractual advice. So bring it to your conveyancer to have a read through the Section 32, and then we can suggest some special conditions to cover yourself on signing the contract and
As in
moving
subject
forward.
to finance?
Subject to
What would be
finance,
another-
subject to building and pest inspection to your satisfaction, and
Yeah,
not
right.
necessarily just a major structural defect or major pest infestation.
And most sellers are okay with those
Absolutely,
subjectives?
yeah. Most sellers these days will accept that there's a building and pest and finance clause.
Okay, wonderful. We've got to go to a break.
Sure.
So stay tuned and we'll be back after these messages.
Welcome back to the Mortgage Buster Show. We're with Chris Walsh from Walsh CONVEYANCing. Back again.
We are.
A question we didn't cover at the beginning, which I'm sure everybody wants to know. Do you have to be a solicitor to do
No.
conveyancing? Because I'm sure everyone thinks you've got to be a solicitor because it's to do with property.
Correct. Well, that's a misconception because traditionally solicitors used to do all of the conveyancing. Now with licensing coming in 2008, conveyancers are highly skilled and qualified to undertake conveyancing works and transfers of property. Conveyancers charge considerably less than solicitors would charge. And having worked for solicitors, I'm fairly au fait on what their charges are. No, you don't need a solicitor. If you've got an experienced conveyancer,
That's the difference.
it's all the difference. You need to choose someone that's licensed, you need to choose someone that's skilled, that's got the experience to hold your hand through the conveyancing process, and that's what I do.
Okay. When I think of a conveyancer, I think residential property. You do residential, you do commercial. Is there anything else that you do
Correct.
that you convey or conveyance or whatever the word is?
We do enjoy doing some subdivision work. We have a number of smaller builders and developers on board that we deal with. Some are just your average Joe doing a 2-lot subdivision. Others we can do 40, 100, 10.
With the council liaison, or you liaison with some of their, because they've got special people do different things
Correct.
during these things.
Yeah, correct. Our primary role in subdivision work is actually submitting the application to the titles office, tracking registration and ensuring that titles issue in accordance with the client's
So
instructions.
it's after it's approved.
So once the
Yeah.
plan's approved, council issue a statement of compliance, and then we get the original plan of subdivision, the compliance. We prepare an application and submit it before the Land Titles Office of Victoria.
Fun work.
So before the interview, you mentioned that a lot of your business is repeat business.
Correct.
So do you advertise for new work?
I do. Look, I pride myself on maintaining relationships. That's a big part of what I do. I've got a lot of real estate agents that I've conducted business with for the last 12, 13 years that use me because they know that they can get me at any time, and I assist them to do a great job in
So
what
you've
they
got
do as
time
well.
for our viewers?
Absolutely, absolutely. Yep.
This is the question I'd like to ask you. Is when it comes to your clients, and you've got a number of repeat clients, what do you attribute to the more successful clients? What is it that they do? Because they keep coming back to you, I imagine. They're purchasing more and more and more.
Yeah.
Are they purchasing or selling? What are the successful ones doing?
I think initially my business started with lots of mums and dads upsizing because they had the growing family, and a few years down the track they might downsize or buy an investment property. So they're either using the equity in the home that they have to buy an investment property. They're also using the equity in their home to help their children buy property. So a lot of our clients have numerous investment properties and hold those properties, and they do well. And it's really fabulous to see that back in 1998 they bought this property
Yeah, you
for
would have
this
seen
value.
some growth in 13 years. Of
Absolutely,
business.
yeah.
And are they really intelligent people, or are they, are they just your average Joes? Or
They're just your average Joes. They've worked hard. They've saved their money. They've had good advice through their mortgage brokers and financial planners. They've taken risks and haven't been afraid to do that, and that's paid off in the long term from their property portfolio. Absolutely, through the development of their property portfolios, and they've got a comfy retirement.
So what was the prices back in 13 years ago? What are we talking about?
What was the process?
The prices.
Dollar value.
What are we talking about increase?
In terms of property prices, you could pick up a house for $80,000 to $90,000.
Yeah. In a normal.
In your Frankston, Carrum Downs, you'd probably pay $120,000, $130 in $30,000 in Mornington, or a little bit further down the peninsula. But
unbelievable.
And now that's that was
400,000.
Yeah,
over 100,000.
500,000.
Now we're reaching the $1 million barrier, and I reckon in 10 years we'll be saying, do you remember when we could have bought all this property for under $1 million?
Yeah,
and a 50-year mortgage.
A generational mortgage.
Yeah, exactly.
So where do you see, Chris, the future of Australia? Do you think prices are going to keep on? I mean, population is growing. There's big demand for more and more property. Where do you see Australia going in a global context?
I guess, on a global concept, I think there's still going to be growth. Certainly on the Mornington Peninsula. We're seeing zoning changes.
Okay.
A lot of things are going from green wedge to being low density residential or subdividable property. So they're trying to carve up some paddocks.
Maybe our beaches will be used one day.
And that's a pretty sacred area too.
Yeah, well, so much of the peninsula is wineries and beaches and paddocks and farms still.
I'd like some land on the beach.
Yeah,
it's all bush at the moment.
Go down a little bit further, but you'll pay a pretty penny for it. But it's a beautiful part of the planet to be living on.
It is, absolutely.
Yeah.
Okay, well, all our guests that come onto our show, Chris, they always offer us a Mortgage Busters special.
Absolutely.
So what's yours?
Well, today I'd like to offer your viewers a 10% discount on our costs. So all you need to do is just quote Mortgage Busters when you phone the offices of Walsh Conveyancing.
What will happen is our viewers will check out our website.
Yep.
Viewers will have all Chris's details on our website. Just go to our website, which is
.com.au. That's right.
Go to our website, and all of Chris's details will be there, and you can make contact with Chris. and you'll offer a 10% discount.
Correct.
Fantastic. That's
Yep.
very generous of you.
My pleasure.
Very generous. Chris,
Thank you.
Thank
it's been
you.
sensational having you.
Oh, thank you so
Well,
much for
I'd
having
love
me.
to have you on again at a later stage.
Please do. Yeah.
It's been really interesting chatting with you.
Thank you.
And we're the Mortgage Busters Show. We'll be back after this break with Stephen Hudson, our
Finance guru.
finance guru. See you soon.
3.
Viewers, you're watching the Mortgage Busters Show. And Adrian,
Yeah.
our last segment, we always have Stephen Hudson, who is our finance guru. Back in his seat. Almost always at the end of the show, or the last part of the show, we have Stephen Hudson, who is a finance expert, broker extraordinaire on the show. Steve, welcome back to the show.
Greg, Adrian, thanks very much. What an exciting week it's been.
Absolutely.
For us all. Great guest on just before, Chris Walsh from Walsh Conveyancing. We'll touch a little bit on that. But what really excites me is the follow-up from last week, the announcement of the 1,000-day Mortgage Busters Challenge.
Yes.
And the feedback that we've had from the viewers has just been brilliant.
But it sounds fantastic.
Oh, it is. And look, let's just put it on the table again. What they're going, what we're putting out there is for the first 100 people that start the challenge, we will pay off $1,000 off your mortgage.
Correct.
One lucky person or couple out of that 100 will make an additional payment of $3,000.
Fantastic.
Isn't
What a
it
great
brilliant?
offer. That's a fantastic offer. Viewers, I encourage you to go to the website. Steve, what else have you got for us today?
Yeah, look, Andrew from Pakenham emailed in through the
Made
website,
contact?
made contact. Want to know about reverse mortgages. His
reverse mortgages.
So
mother
what's that?
at the moment is thinking about doing a reverse mortgage.
So what is it? What is it?
Good question.
Does that mean the bank owes you money? Or
it's a bit of
Would be
a
good.
strange one. Well, reverse mortgages, first off, you should really seek some legal and counsel on before you do a reverse mortgage. They're very, very expensive.
a lot of people have heard that terminology before,
But have no idea.
don't
Don't
really
know
know
what
what
it
it is. Yeah.
So what it is generally it's for reserved for more mature people. Banks say 60, 63, 65,
It's a nice
depending
age.
on the policy. But it's for people who have paid off their house, so they can go to the bank and say, I want X amount, but I'm not going to make any payments for the rest of my life.
Till they die.
Till they die. And interestingly, one of the lenders at 65 is the minimum age. They would let the applicant have the loan for
How long?
99 years.
164.
164 years.
That's not bad.
Lifespan is pretty optimistic.
Maybe in
So-
the future.
So the way it works is that, and I'll just use the faithful
The
whiteboard.
whiteboard, yes.
Yeah, here we go. And this is the way that banks look at it. If you're around about 65, say 73,
What if
80,
you did mention your house is paid off, but what if it's just got a little bit to go?
case by case.
Right.
But it's really there for someone who has $1 million worth property and you owe, say, 10, 50, whatever it is,
Right,
that they may
right.
entertain that. But you'll
Okay.
probably see here the reasons why. They will lend somewhere between say 15% of your total
Value?
value, estimated market value. As you get older, they'll go up a little bit more, say to 20 and maybe to 25 at this particular level. Then they'll put a minimum on it. So if you've got a property that's worth, say, $1 million, how do you do millions? We should have put a K in there, K's for 1,000. Then you can get $250,000.
That's it.
Okay, some of them will have maximum, some will only have 50. But what happens is that the interest is then accumulated over the period while you're still alive. So if you take this loan out at 15%, and so let's say it's a maximum of 25, and you take 150 out, K for 1,000, at that particular age, and the interest keeps coming in, and you live to 80, that interest will be added to that $150,000. So you may have a mortgage at the end when you pass away at $500,000.
Double.
Okay, so that's the downside of it. You've really got to do the numbers. You've got to get some legal advice on it. Interest rates, for instance, currently is around about 5% in the marketplace. That's not a comparison rate, but most mortgages or reverse mortgages are about 7%. So not only are you accumulating the interest and it's building up as time goes, but you're paying about 2% over the odds, what a normal mortgage would be.
Most young people wouldn't want their parents to do that.
No way, I was just thinking that.
You're nothing left
there's
over.
no inheritance.
No inheritance, Andrew. So, Andrew, when you're having a discussion with your mum or dad
That's
about
all over.
reverse mortgaging, you can say, what's in it for me? So,
You're better off to fund your own parents.
Sign here.
But
So
is
make
it,
an
does it
agreement.
work? Is it good? Is it? I mean, for some people, I could see that could be a lifesaver almost.
oh,
Of course, 'cause
absolutely.
their house are falling apart.
Let's say someone has got a terminal disease and cancer or whatever. Okay, so and they've been given an X amount of time to live, and they've got the house paid off. And the kids say, "Mom, Dad, go and enjoy yourself," or whatever the situation is. Then they take out a mortgage of say 60,000, 80,000, whatever it is, and they go off for that trip that they've always been planning. Great opportunity.
Well, what happens if the person survives till 80 and then dies? Is the property sold, the debt's
Property
paid
sold
off,
and the debt's paid off.
and the rest goes into inheritance?
It goes into the inheritance, goes
Right.
into the will, so into the estate as they call it, and some of the banks actually guarantee it. Because where you're heading there, let's say it's 500k and the property's only worth 400. There's $50,000 missing, correct?
Right.
Some banks will actually give a guarantee that if that scenario exists,
Happens.
then they will wipe off through an insurance policy that $50,000.
Because they're basing themselves on it growing.
Yeah. So
Anyway.
they're the things, Andrew, when you're looking at different reverse mortgages, the interest rate, what they can borrow, and what happens if parents live for a long period of time and the estimated value of the property doesn't go up at the same rate as the mortgage does.
I'm thinking about all these people in Dandenong Road near Paran, where all those big houses worth $3-4 million, when they've got one elderly man or woman or an elderly couple living in, and they can't afford to live.
Absolutely, and that's another way of getting some cash flow for be asset rich.
Well, you
cash
can't
flow
maintain
poor.
them. They've got no income.
Look, Steve, we've just got a couple of minutes to go
Okay.
before we need to end. But just quickly, Chris Walsh, she was fantastic.
She was, yeah.
Our recommended conveyancer. She did mention about first home buyers.
Yep.
And quite often they're so excited and so rapt about purchasing the property that sometimes they can get themselves into a little bit of trouble there just by being too eager and not doing the due diligence.
Yep.
But how do you see first home buyers?
Well, first home buyers, there is a big cry in the marketplace for we can't afford it, but there's a lot of first home buyers that can actually afford a home if they're prepared to go out to where Andrew lives out at Pakenham and so forth. The land's reasonably cheap, and there's some great incentives from the government with the first home buyers grant.
Just quickly, what are they?
First home buyers grant is $10,000.
It doesn't cover everything, does it?
No. Your bank requirement's still 5% genuine savings, but you get a $10,000 first home buyers grant, and that's paid on a construction contract. So additionally to that, when you're buying the land and the house at the same time, you'll get a 40% reduction on your stamp duty. Now, on a $200,000 block of land, that's $2,500 saving.
Okay.
Plus the $10,000, that goes towards your funds to complete. So really like to do a show on how we can get a first home buyer into the market on a minimal amount and just show what steps are. Although we're the mortgage busters, you can't bust a mortgage unless you've got one.
Yeah, I know,
You
exactly.
can't create wealth. So just what we said from the very beginning, reminding people about the 1,000-day Mortgage Busters Challenge, that we're putting $1,000 in for the first 100 people to pay off on your mortgage, and one lucky person in that 100, we're going to donate a further $3,000 to their
Fantastic,
mortgage.
Steve. So we've got to cut there. We've got to finish for the day. On behalf of Steve, Adrian and myself, have a fantastic week, and we'll see you here next time, same place. Bye-bye.